My name is Manav, and I'm co-founder and CEO of Monocept. We are one of the gold partners of Microsoft and AWS Cloud. The companies, we are a pure play software company founded by senior technologists from Microsoft, Oracle, CA, building large-scale high-performance systems. We are 174 engineers strong, 30 plus clients. A lot of you are our customers, and we are honored to be serving you. We have offices across India, Hyderabad, Gurgaon, Hyderabad, and New York. Couple of patents in the AI and NLP space, and bit of edge IoT, which are very, very useful in the insurance domain. Our clients, some of the very big names: Max Life, ICICI Lombard, Religare Health Insurance, IFCO Tokyo, Aviva Life, Apollo, and if you are, and I'm sure some of you are here who have been, with us for a while, and others who are not there, you are welcome. We have a stall. We can discuss some of your technology problems in detail. So our philosophy, we are inspired by X. X is the same algebra unknown that grade 6 they teach. You start off with a problem statement, you define that unknown as X, and then you go about solving that X. So we identify, or we solve, and we find your X, whatever that problem statement you might be facing in your day-to-day technology issues, right? So we are critical thinkers, visionary, and digital architect. So today's talk is mostly about how technology can be used as your competitive advantage, and it's more a bit of mix of strategy as well as how technology impacts your competitive strategy. To start with, I'll begin the conversation with this cost differentiation curve. First talked about by Dr. Michael Porter in 1996. He's a Harvard professor. So on the one side, you would see the differentiation high, low, and on the other side, your relative cost position, high here, low here, and then this is more like a productivity curve. So what Dr. Porter said is, as organizations, you can define your competitive strategy across these two dimensions. Either you can be on the differentiation side, where you create a very distinctive product for a given market segment. You may have high cost structure, but you have the ability to charge premium. And some of the examples are BMW, Emirates, Apple, who knew you can charge 1 lakh rupees for an Apple iPhone, right? So it's a very distinctive product, and they are playing on a differentiation landscape. On the other hand, you have a relative cost position. Essentially what that means is you achieve the lowest cost in the industry, pass on that lower cost in terms of lower prices to your customer, and become a mass market player. So a couple of examples are Toyota. I mean, we all know about how Toyota is improving efficiencies in their manufacturing processes. We have Southwest, we have Indigo as an airline, and Xiaomi, which publicly says that it's 5 to 10% of the gross margin is what they're going to make. All other benefits they are going to pass on to the consumers. So then the relative question is, for your business, right, if you look at it, for a given cost position C, right, where are you in the differentiation curve? It's D1 or D2. In the past panel, a lot of discussion happened on the actual cost of policy issuance. So this is the one way to sort of conceptualize or look at your problem statement. Other problem from a cost perspective is, given a set of differentiation, where are you? Are you at C1 or C2? If you are lying here, maybe there are cost efficiencies for you to work upon and increase your cost differentiation. So why this curve matters, right? So let's look at this chart. So we have an average firm which has some cost of producing that product or a service, and then there is a value for the firm that you derive. So more like a willingness to pay. So on the differentiation side, your costs are high because you are investing a lot in the technology, you are creating a differentiation product. Companies like BMW, they go to F1 car racing, they go to various wind tunnel and all that stuff, and all that know-how they bring back, and then they say, hey, this is the ultimate driving machine, and people love to pay premium for it. If you are in this differentiation, people are willing to pay higher premium, and then it means that you are able to derive higher value. But it's not easy to be in the differentiation game most time, right? The cost leadership is where it's easy to begin with, right? So you drive down your costs so low that you are able to lower your prices vis-a-vis a competitor and still able to derive a higher profit margin for your customer, for your organization. So how does all of this fit together, and how does technology impact this curve? So if you look at this differentiation curve, right, on the differentiation side, using technology, you can create a uniqueness, right? There was gentlemen, they were talking about various insurance products. There is a need to create varied products. So that's a differentiation game, and technology enables you to do that. You can raise the barrier of imitation, substitution, entry for your competitors. You can enhance the power of your supply chain. In your case, it's a value chain that requires continuous investments in your R&D and creating that. All the innovation, AI, ML, and digital that we talk about falls in that differentiation curve. On the other hand, from a cost position perspective, the entire digital, right, where we are looking at your activity diagrams and driving down the cost, bringing those cost efficiencies. Digital is nothing more than driving down your cost efficiencies, right? Continuous improvement culture, right? Taking some of the customer self-serve thing directly to the customer, bringing AI and chatbots where customers are interacting, and thereby you are driving down the cost. ATM machines are a great example of that, where instead of physically going to the branch, you can now take that out. Example, process automation, supply chain optimization, and so forth. So how does this all impact the insurance industry, right? How do we visualize this from an insurance perspective? So I've taken the liberty to capture some of these insurance examples. Let's say marine, cyber life, D&O, general liability, they may be on the differentiation side of the equation, where it's not a mass market thing. There is a very specific product line. There is a very specific market segment that you are going after. These guys are willing to pay you more. On the other hand, in a mass market type scenario, there are life insurance, motor, health, travel, and maybe Ayushman Bharat, maybe Fasal Bima Yojana, or some of the sachet products that our panel earlier talked about. Can we do a five-day insurance, right? Can we do a 10-day health insurance? Or in a gram scenario, if there is a loss of wage, all of these fall under the cost differentiation scenario. So from a technology perspective, right, in the differentiation thing, you have to build a very, very great product. It's not just a pretty UI or a nice mobile app. It's also about how you are looking at your performance of the system. If in today's world where Facebook, WhatsApp, Insta, people, it's an instant access, instant gratification. If your systems are not stable enough, customer will move on, right? So it's all about building that scalability. It's also about building that agility into your system, where quickly you are able to enable new features, get onto a new market, right? And create various distribution. There's a famous arm's length distribution concept by Coke, where as a strategy, it's like everywhere they go, everywhere a consumer go, you have the ability to get a Coke within the arm's length, meaning the distribution networks are so small. All of this are enabled through a technology. On the cost front, you have to look at your entire fulfillment journey, or your policy issuance, from your proposal writing to policy issuance, your renewals, how your customer onboarding is happening, how your agent onboarding is happening, is there an attrition happening, is there a customer drop, the customer is, your insurance pays a lot of money to Google, but is that conversion really happening? And if so, is it happening because of the technology, or you are dropping because of the technology is not working? Then how do you look at your software development? How do you look at your defect investigation? How do you do partner integration? How do you do bank insurance? All of these scenarios are on the, the relative cost curve, which means that there is a need to drive down your cost across that segment, where transaction cost, earlier one of the questions was the cost of creating a policy, has it changed? And the answer was it hasn't changed in years, which means that there is a need, or it's a great use case to bring down those efficiencies and generate more profits for the organization, and hence you can invest in the business. So where Monocept is in all of these scenarios? On the differentiation curve, we have enabled, there is a new architecture called Zeta architecture. We have enabled this for one of the health insurance companies, and it ensures that there is a zero error in the reconciliation process, payments, bulk upload, reverse feed handling, things that you are impacting on a day-to-day basis, right? Similarly, we have enabled very high performance scalability and software agility into system. We have a couple of customers who have benefited from our expertise in this area. Similarly, we have implemented a cloud-based serverless architecture for completing the entire fulfillment journey for one of our life insurance customers, and it has reduced that end user from 30 minutes to 10 minutes. We have OCR solution where in a claim journey, you get these forms from various hospitals, various labs and such, how using technology you can automatically read all of that information and reduce that claim. When especially in a health scenario where the patient and their relatives are in that hospital, they want to go home, there is a need to reduce that time. So you enable these OCR technology. Similarly, recently IRDA came up with a regulation where if the Aadhaar is being taken as your digital identity, and if you are saving your Aadhaar images, there is a need to mask those first 8 characters. How do you do that with the technology? So these are some of the examples where Monocept is working in this direction with various customers who are in audience. On the cost front, which is where you normally should begin with, right? So we have reduced a CPU consumption from 92% to 18%. It may appear like, who cares? But you know what? If you are on a 64 core architecture and you have to pay crores and crores to Oracle for licenses, and if you reduce that need to 8 cores, that's a huge, huge saving right off the bat. We have enabled that. We have reduced DB consumption from 13 hours to 10 minutes. Some of those queries were running for 13 hours. We reduced that to 10 minutes. That enabled a lot of customers to come and do the business. Similarly, 40 seconds to 5 seconds in terms of high transactional website, 12 months to 2 weeks in terms of the software delivery cycle. Each release would take 3 months. And I remember a customer when we first started talking where they said, there is a change where I need to now send an SMS, and SMS should contain certain information. The IT partner they were working with, they said it will take 14 days to enable that change. And in 14 days, they still couldn't do that. So how do you bring those efficiencies? How do you bring that aspect of software development into your organization? Working with partners like us where we enable those scenarios, where you can reduce that release cycle. How do you investigate those bugs that are coming and waking everybody in the night? And last but not the least, 20 man-month resource need per month is what we have reduced. So some of the examples, I'm running short of time, and we have a booth, so we can take this conversation outside the booth, and would love to discuss all your challenges, where we, as a Monocept, we can help you in terms of your journey. So any questions? Sorry? We'll catch up at the booth.
All right, ladies and gentlemen, a big round of applause for him for this brief and elaborated presentation and for highlighting some of the key imperative factors. May I please invite Dr. S. Prakash, COO, Star Health and Allied Insurance, in order to give away the certificate and felicitate Mr. Manav Gaur, CEO, Monocept Consulting Private Limited. A big round of applause for both of them for being present with us. Thank you so much.